So that is December 2021, question 5C, page 31. We are told that Pata PLC started trading on 1st January 2020. The following is the statement of profit or loss for the year ended at 1st December 2020. Sales are inclusive of VAT at 16%, at 14%, sorry.
Excuse.
VAT
Excuse.
Taxable income should not be affected.
Excuse.
Lazima tutoe hiyo VAT. Cost of goods sold, gross profit, decrease in provision for bad debt. Is it a taxable income? It is taxable if it is what? Specific. So we need to clarify.
Umesema swali gani?
We go with an assumption. Dividends from a subsidiary company tuzipeleke kwa other.
Which question have you asked?
Maria, December 2021, question 5C, page 31.
Excuse. Which question have you asked?
Huh?
Hiyo swali sina kwa nini yangu. Sina hiyo question. Sioni kwa niko na tu Mungu wangu. Wangu haifanyi kazi. I'm tired. Question? I am back. Sorry.
Okay, so Pata PLC started trading on 1st January 2020. The following is the statement of profit or loss for the year ended at 1st December 2020. We have sales inclusive of VAT. VAT lazima tuitoe. Cost of goods sold, we get the gross profit. Decrease in provision for bad debts, they'll be taxable. Kama ni specific. Remember, decrease in bad debt is an income. It will only be taxable if there's specific bad debt, right? Then you have dividends from the subsidiary company to the for other incomes, to for income statement. Rental income, it end up here for other income, right? Foreign exchange gain, realized taxable income. Realized taxable. Capital gain on sale of building. Is it taxable? It is not taxable. We are not in the business of buying and selling buildings. We less the expenses, salaries and wages, are they allowable? Yes, they are allowable. Subscriptions to trade association. Is it okay? Yes, it is okay because you are allowable. Legal and professional fees, is it okay? We can say subject confirmation because for the legal fees ambazo si allowable. We need some confirmation. Audit fees, is it allowable? Lazima tulipe audit, ndio. Donation to Women Welfare Association. Is it charitable? The women welfare. Women welfare. Welfare is not a charitable. Does it exist to reduce poverty and hunger? Are they institutions? They are not. No, they are not. It's not a charitable institution. You're welfare. So yeah, pana. Ingekuwa children's home, nyumba ya wazee, church, mosque, school, the charitable institutions tungezi allow. Estate management fees for rented property. Tepeleka kwa rental income, ndio. Tutoe kwa biashara. Impairment of rental property. We don't know what impairment is. Maybe it is allowable. As far as assets are concerned, which we only know is capital allowances. Any other thing, kelele. Mara amortization, depreciation, impairment, kelele. Kelele. Alright. Then we have purchase of furniture. Is it allowable? Furniture is not allowable. Furniture is fixed assets. When you buy fixed assets, you take them to the balance sheet, not the income statement, right? By example, I paid the capital allowance. Purchase of computers, is disallowable. You don't take them to the income statement, you take them to the balance sheet. Purchase of saloon car, disallowable. Rent and rates, is it allowable? Rent and rates, lazima tulipe rent. Advertisement, is it okay? And we get the net profit there. 2/3 of the cost of goods sold comprised of purchases which are overcast by 20%. Some purchases are overstated. When purchases are overstated, profit is when purchases are overstated, profit is understated. So how do you remember the opening stock and purchases have a direct relationship with profits. Kama zimekuwa overstated, profit inakuwa understated. To correct, we add back. We add back. So shall say, salaries and wages include redundancy payment to former employees. Is it okay? Redundancy payment is allowable. Directors' bonuses.
Kidogo. So the overcast.
Allowable. Christmas party for directors' family. Yet we allow. Yet we kuwapenda sana. But not disallow. More private. Directors' allowances, is it okay? That one is okay. Legal and professional fees, processing of title deeds for company piece of land. Unique capital. Disallowable. Registering of trademarks, is it allowable? Trademarks. Are they fixed assets? Trademarks are intangible assets. Fixed assets. Kwa hivyo ni kelele, disallowable. The trademarks is an intangible fixed asset. The copyrights, the trademarks. So registering them, you know what is allowable. Renewal of 60-year lease, is it allowable? Haijafika 99, ndio. Negotiating a bank loan, is it allowable? When negotiating a bank loan, can you allow? You allow unadanganya. What is allowable for a bank loan is the interest on loan, not the cost of getting the loan, the finance cost, interest on loan, that is allowed. Tax appeal against tax assessment, allowable, disallowable. Tax appeal. Do you allow? The only one that has tax and is allowable, tulisema, na tukasema ni gani? Unless kama ulikuwa mjanja ndio uliandika. Kama ulikuwa mjanja hukuandika. Kwa hiyo kusema muandike. The only word that has the word tax and it is allowable, which one? Shall you can? You say something to tax consultancy fee. That customer, it is the only word that has the term tax and it is allowable, the professional fee. Any other thing that has the word tax on it will be disallowed. So tax appeal will be disallowable. KRA cannot allow the cost ya kuwashtaki. Sasa ni moja tu peke yake kuna jina tax na tutaiallow, tax consultancy fee, the professional fee. Settling customers' disputes, is it okay? Is it allowable? The legal fees incurred to settle customer disputes, is it allowable expense? Or disallowable? Talk to me. Allowable, disallowable?
Ni disallowable. It's disallowable.
When you're sorting out issues with our customers, it is allowable.
Disallowable.
Yeah, hiyo tunaiallow. Parking fines, we cannot allow that. Ndio. Si fines inamaanisha ulifanya makosa ndio utakuwa unachukua fine. So we disallow that one. Defending a director for breach of law, we disallow. Ndio. Installment tax paid, we also disallow. Then audit fees include 124,000 for penalties for late filing of tax returns with the Revenue Authority. We disallow. It's again a penalty, kulifanya makosa mwenyewe. Advertisement expenses comprise billboard, allowable. Billboard is a fixed asset. Neon sign is it allowable? It's also a fixed asset. Neon sign is also a fixed asset, but it is allowable. Then 150,000 for hosting the company website. Cost of hosting the website. Hosting is allowable. We pay hosting fee annually. Hosting fee tunalipa annually. Kutengeneza hiyo website. Kutengeneza hiyo website is disallowable. But hosting, we pay hosting annually. Purchases figure includes the cost of forklift amounting to 720,000, which was also inflated by 20%. Can you remove the forklift from the purchases? We talk about purchases. So meaning our purchases are overstated by 720,000. When purchases are overstated, profit is understated. We add back to correct. Tax is at 25%, no problem. Investment allowances were agreed with the Commissioner for Revenue Authority at 2840,000. So KRA agreed with the capital allowances at 2840. Kwa hivyo, zile fixed assets ziko pale juu zote. Hakuna kitu tunazifanyia hapo. Tunazitoa kwa income statement, KRA washatuambia capital allowances is 2840. We shall deal with it. Tax is 25%. A statement of adjusted taxable profit or loss for the year 2020. Let's take care of that. So you have Pata PLC. So Pata PLC 2020 adjusted taxable income. So the figures in thousands of shillings. We have the reported net profit. The company reported the net profit of how much? 18,750. Then we add backwards. It's called these are disallowable expenses. We add back disallowable expenses, starting with additional information. So number one, 2/3 of the cost of goods sold comprised of purchases which were overcast by 20%. So can we add back overcast of purchases? So purchases are overstated, profit is understated. Correct, we add back. So they are overstated by 20%. 20 over. The 20 over 100 or 20 over 120? So it should be 20 over 120 times 2/3 of that. How much is our part of this? Two-thirds of the goods, cost of goods. How much is our cost of goods per day? 75,690 million. How much is that? The 2/3 of 75,690 and 20 over 120.
8410.
How much?
8410.
8410. That's okay. Salaries and wages include redundancy payment to former employees. That is okay. Directors' bonuses. Can we add back Christmas party for directors' family? Christmas party for directors' families, so that directors. How much are we having? For 74. Directors' allowances is okay. Legal and professional fees. Can we add back processing of title deeds? The processing title deeds, Pesangami. 720. Registering of trademarks, can we add back? Costing 300 and what? 366 add back. Renewal of 60-year lease, that one is okay. Negotiating the bank loan, can we add back? Bank loan will negotiate that Pesangami. 460. Tax appeal, can we add it back? The tax appeal, yes, Pesangami. 188. Settling customer disputes is okay. Parking fines, can we add them back? The parking fines 360. Defending a director. The director's defense. One defend director at a cost of 200 and what? That's a private expense. Installment tax, can you add it back? Installment tax at a cost of nothing. 700. Then can work for audit fees, include 120 for penalties. Can we have the penalties? The penalties for late filing.
Mwalimu, I don't know if you can hear me. Hello? Excuse, can you hear me? Yes, I have a question.
Okay.
For the overcast, I was speaking, but maybe you are not hearing me on the overcast of purchase. So, you've said that overcast will reduce the profit, and how to correct it is lessing it. Then I am wondering why we have not deducted it.
Console. Just send the chat and see. Or you can text on the link online and see the chat. Either. So advertising your page. So I'll see your message then I'll revert. Advertising expense comprise. Can we add back the billboard? So add back the billboard. billboard at the cost of 380. Can we add back the new sign? The new sign is cost 240. Then after the new sign, we also did 150 for hosting the company website. Hosting is okay. Yeah, we mentioned that correcting an overcast is done by deducting, but we are not yet at the point of deducting. Remember, it is not always that when it's an overcast, we deduct. It all depends when it's an overcast of an income or an overcast of an expense. In our case, it is the purchases that were overstated. So meaning an expense was overstated. When purchases are overstated, that means our profits are understated. When we claim expenses mingi, imepunguza profit state. So the overcast is on purchases. Purchases ni expenses. Expense imekuwa overclaimed. When an expense is overclaimed, then profit is understated. And that's why we add back the overcast. We don't less. If it was an income that had been overstated, then that would mean the profit is also overstated to get it out. That's why the opening stock and purchases have an inverse relationship with profit. If they are overstated, profit is understated. In our case, the purchases were overstated, profit was understated. So we are correcting these profits. If profit will report kidogo because of this problem of purchases. To make it good, we add back to correct our profits. So, kama tungekuwa sales ama closing stock, hizo tuna account for them like incomes. If the closing stock of sales are overstated, profit is also overstated. Hapa sasa tungededuct. I hope that is clear. Great. Now, purchases figure includes the cost of forklift. Can we add back the forklift? Iko kwa hizo purchases zetu. Forklift ya pesa ngapi? 720, which was also inflated by 20%. The amount that was reported was 720, so we have no problem. So 720. How much we end up claiming capital allowance? We can claim at the correct figure. But unfortunately, examiner must calculate your capital allowance in note number 7. So that's one triacha vehicle. Investment allowance to the deduct. Rudi kwa expenses value. So salaries and wages already taken care of. Subscriptions is okay. Legal and professional fees already taken care of it. Note number 3. Audit fees is okay. Donations, women welfare. Can we add it back? That's not a charitable institution. When one donates Gabi, with 408. So add back the 480. Estate management fees for rented property. Can we remove it from the business? So estate management fee, you need a rental. So estate management fee, are you having 136? 136. Impairment of rental property, can we add it back? Rental property impairment ya pesa ngapi? 180. Purchase of furniture, can we remove it? Walinunua furniture wakaweka kwa income statement badala ya balance sheet. How much was the cost of furniture? 124. So we also have computers. Computers wakanunua na wameweka how much? 100 watts. 150. Rent and rates is, do you have saloon car? Saloon car wakanunua wakaweka kwa income statement how much? 3,400, we remove it. Rent and rates and advertising, those ones are okay. So let's see what to less. So whatever to add back, charge hizo tumezimaliza. So tuende kwa kuless. Can you start by lessing investment allowance? Capital allowance. That is depreciation. Hiyo tax language ya depreciation. Capital allowance wamesema wameagree kwa itakuwa ngapi? 28. 2840, not number 7. Not number 7. Haya. For additional information, sioni kingine cha kuless. Turudi pale juu. Can we less the VAT on sale? 14 over 114, right? Then how much of our sales? 114,000. The sales are not at 100%, they're at 114. This becomes 14K. $14,000. Decrease in provision for bad debts. The examiner is silent. Kama ni specific, kama general, lazima uandike, we make assumption. He's silent on what they relate to. So you have decrease in provision for bad debts. You assume general or specific. You make an assumption that makes the life easier. So you assume specific so that you let the dash. But make sure you assume. All the assumptions must be stated. Dividends from subsidiary. Can you remove it? Dividends from subsidiary in the Sangha video. 1,500 for income statement. Rental income. Rental income. Is it 1460? 1460. Foreign exchange gains, they were realized, so we're okay with them. Then capital gain on sale of building. How much are you having? 390. So let's get those figures. How much are you adding back? How much are we lessing? Add back. 18%. Another less. 20, 2190. So our adjusted business income. So this plus that minus that. 17,020. Do you have other incomes to bring in? So some of the income, some of the items that we removed from the business, hatukuzitoa kwa sababu haziko taxable. Zitoa kwa sababu za biashara. Like we had the dividends from subsidiary. Did you mention something on taxation of investment income? Dividends na interest bado tujazungumzia. Sasa hapo weka tu dash.
Hapo kwa za add back mimi nimepata a different answer.
You got a different answer?
Yeah.
Add back. How much do you have?
From you 8410 to 3400.
18?
Kutoka kwa hiyo ya overcast hadi ya saloon car. Addition za hizo, si ndio?
The overcast of purchases.
Ndo nauliza addition ya the disallowable expenses, si ndio?
Disallowable expenses.
Mimi nimepata 17,814.
17?
814.
17,814.
Yeah. Yuko kuna baadhi.
Okay. 17,814. Na kuna wawili wa 17,814. This one. Jacob 17,814. I can look at 17,814. Check well. The math was 17,814 plus 18,750 minus 2190. Okay. 374. So let's just document that. So other incomes, dividends from subsidiary, your net dash shall understand why. Then you also get the rent on income. Let's assume it's residential houses with a dash. That we have our total taxable income. $16,374. So tax liability. Wamesema ki tax na rate ya ngapi? 25%. So 25% of 16,374. That is it. Unless there's a question. Maswali hajafika. Hajafika lini? Kapitie kwanza maji. Hi. Let's focus something on taxation of investment income. Taxation of investment income. Taxation of investment income. Let me say it includes dividends and interest. It includes dividends and interest. So investment income is basically the income that you get from the investment. You invest in the shares of a company, you get dividends. You invest in debentures. Interest is what we get by giving out our money for somebody to use. The income from the use of someone's money. The income you get by giving out your money for somebody else at a particular interest. So let's start with taxation of dividends. And just the dividend income as a subtopic. Dividend income. Then we say, for tax purposes, dividends are of three types. For tax purposes, dividends are of three types. Number A, exempt dividends. Number B, qualifying dividends. And number C, non-qualifying dividend. When you talk about exempt in Amanisha, there is no tax. It is fully exempted from tax, no tax. Then for qualifying, in Amanisha, 5% withholding tax is final. 5% withholding tax is final. Then for the non-qualifying, 15% withholding tax, not final. %, withholding tax, not final. Qualifying, 5%, exempt, no tax. Non-qualifying, 15%, not final. Not final inamaanisha lazima zitaksiwe tena, lazima tuziongeze kwa other income ili ziende zitaksiwe tena. Let's start with exempt. So exempt dividend, they include dividends received from overseas. Dividends received from overseas. Dividends received from investments outside Kenya. So you bought the shares of a foreign company. When that company will be paying the dividends in Kenya, we shall not subject those dividends to any tax. So they consider them as exempt dividends. Another example. Dividends received by a company. Dividends received by a company from another company. Dividends received by a company from another company where it controls. where it controls more than 12.5%, where it controls more than 12.5% of voting rights. More than 12.5% of voting rights. Voting rights in ordinary shares. Yeah. So now when this company A controls more than 12.5% of ordinary shares of company B, when company B will be paying the dividend, it's like we're paying ourselves. Because we have significant influence. It's just like getting money from this hand and putting to the other hand. We are paying ourselves the dividends. Such dividends will be tax exempt. Another one. Dividends received by insurance company. Dividends received by insurance company from investments of its life fund. From investment of its life fund. From investment of its life fund. Sometimes the life assurance premiums that we get, we decide to invest those funds. So the dividends shall be receiving from such investments will be tax exempt. Here we show. We have something called deemed dividends. Dividends. Something that is deemed is something that is assumed. So i.e., any form of distribution to shareholders, any form of distribution shareholders after voluntary winding up of the company. After voluntary winding up of the company. So upon voluntary winding up of the company, any form of distribution that we make to the shareholders, tunalipa madeni yote tunamaliza, tunabaki tunapea shareholders. Whatever the shareholders will get, that's what we call the deemed or assumed dividends. Qualifying dividends, number B. Qualifying dividends. To explain what they mean. They attract a 5% withholding tax, which is what? Final. So you say they include dividends received from a company. Dividends received from a company. And that's why none of these dividends, they are coming from a subsidiary company. Na walituambia ni net. Net ilimaanisha kuna kale ka 5% kalikuwa kametolewa. But because it is final tax, it should not be subjected to any further taxation. Hatukudileta hapa. After removing them from our income statements, tukabaki na income to tax. And because they are qualifying, they should not be subjected to any further taxation. We should not bring them here. But anything that comes here, it only the profit. Nigeria itaxiwa na 25%. And because they're not subject to any further taxation, we don't bring them under other income. Another example, dividends received from SACCO. What is SACCO in for? SACCO in for? SACCO is SACCO. Savings and credit. Cooperative society. And savings and credit cooperative society. Those are the SACCOs. So when you receive dividends from your savings and credit cooperative society, those dividends because the 5% withholding tax is what? Final. Non-qualifying. non-qualifying dividend. Then you say they are subjected to further taxation. They are subjected to further taxation after the withholding tax. They are subjected to further taxation after the withholding tax and include dividends received from a cooperative society. Dividends received from a cooperative society other than SACCO. A cooperative society other than SACCO. So remember, a SACCO is simply an example of a cooperative society, savings and credit. But you're looking at receive dividends from Mwalimu Cooperative Society, not Mwalimu Savings and Credit. Your savings and credit is equal. It's how Ukulima Cooperative Society, Jumuiya Cooperative Society, Mbinguni Cooperative Society, or it's going Mbinguni SACCO. It's going Mbinguni Savings and Credit. That's how. All SACCOs are cooperative societies, but not all cooperative societies are SACCOs. Because a SACCO is simply an example of a cooperative society. That's how. Interest income. So kumbuka investment income tulisema ziko mara mbili, dividends and interest. So we've seen how to tax the dividends. So interest income, under interest income number one, we'll talk about number A, exempt interest. Exempt interest. About exempt interest. Weka kwa brackets mbele, no tax. So you have exempt interest, something that is exempt. That is something that don't attract any tax, no tax. Then you have qualifying interest. Qualifying interest is about 15% withholding tax is final. 15% withholding tax is final. The non-qualifying interest, 15% withholding tax, not final. So qualifying and non-qualifying, totally 15%. The difference is qualifying is final tax and qualifying not final. So exempt interest, exempt, it includes interest from overseas investments. So interest you receive from investments abroad. Another one. Interest from investments. Interest from investment in Postbank. Postbank ni bank ya serikali. So the government to encourage people to invest, go and put your savings in the Postbank so that it doesn't attract any tax. Want to encourage you, but Postbank doesn't exist. Do you know what it is? It's a good bank. We still have it. We still have accounts in there. Yes. What did you gonna tell us? But not very active still. Yeah. I understand with the competition that has come from the private banks, the government banks are really struggling to catch up with that competition. Pia siku hizi ukienda Post Bank kuna cover bit. Yeah. Acha niache maswali. Niende nijitafutie. Sio bad. You need to give us a reason of joining it. Anyway, you tell up AOB. Another example, interest from investments. Interest from investments of NSSF. NSSF income. So the National Social Security Fund is what pesa tunaweka huko ina invest in some other projects. The interest that we shall be earning from our investment in NSSF should be exempted from tax. Because after them investing in projects, the returns from such investment are shared to the members. The interest we earn from such investment is tax exempt. Qualifying interest. Qualifying interest. It includes interest received by individuals only. Interest received by individuals only. From financial institutions. Interest received by individuals only from financial institutions and government securities. Individuals only from financial institutions and government securities, into brackets, treasury bills and treasury bonds. So individuals who can receive here interest in a poor qualifying 15% withholding tax is final tax. The non-qualifying, then for non-qualifying you say it includes interest received by companies, from financial institutions and government securities. Interest received by companies from financial institutions and government securities. Great. So my only request is, hata kama zingine zote zitakataa, shika non-qualifying. Non-qualifying dividends, non-qualifying interest. Sababu, kama tuko na non-qualifying dividends, zitakuja kwa other impacts. The dividend from a cooperative society other than the SACCO. Itakuja kwa other income because the withholding tax of 15% is not final. Lazima tulete hapa the growth. Non-qualifying interest, the 15% withholding tax is also not final. Lazima tulete kwa other income. And for interest, it will only be non-qualifying if you are dealing with the company. Because it is interest received by companies. Taxation of a partnership. Taxation of partnership business. Individuals invested in. If you've invested in other companies, you earn the dividends. Because we invest for companies unanunua shares zao. Investing in a company, you buy the shares, right? So you earn the dividend. But if you put the debentures of a company, you're also receiving the interest, of course, and that interest will be categorized under qualifying. Individual investment has no non-qualifying. Non-qualifying interest is only for companies, not for individuals. And it must be coming from where? The financial institution and the government. Great. Taxation of partnership business. Taxation of partnership business, then we can start by saying a partnership is never taxed. A partnership is never taxed. Full stop. It is the respective partners. It is the respective partners who are taxed on income from the partnership. It is the respective partners who are taxed on income from the partnership together with their other incomes, based on their profit and loss sharing ratio. Together on their other incomes based on their profit and loss sharing ratio. Next point. Computation of adjusted partnership income. Computation of the adjusted partnership income is done in the same way. Just like any other business. It's done in the same way, just like any other business. Except that no transaction between the business and the partners. No transaction between the business and the partners is allowable. No transaction between the business and the partners is allowable. I.e., number one, salary to partners is disallowable expense. Salary to partners is disallowable expense. So if you pay salaries to partners, itakuwa disallowed. Kumbuka kwa kawaida salaries and wages ni allowable. But you are not allowed to pay anything to the partners. Salary to partners is allowable. Another one. Interest on capital. Interest on capital is disallowable expense. Interest on capital is disallowable expense. Number three, commission or bonus paid to partners. Commission or bonus paid to partners is disallowable expense. Commission or bonus paid to partners is disallowable expense. Another one. Interest on drawings made by partners. Interest on drawings made by partners is non-taxable income. Interest on drawings made by partners is non-taxable income. So here the income ambayo tulipi tax. Another one. Number 6. Other incomes. Number 5 or number 6? Number 5. Other incomes are included in the allocation schedule. Other incomes are included in the allocation schedule, but not below the business income. But not below the business income. So other incomes hazikuji hapa. So for the partnership, story yetu kuishia hapa. Hizi hazikuji. Naenda kwa allocation schedule. So let's see how allocation schedule looks like. So allocation schedule. Let's assume we have two partners. For a partner anajiita A, partner mwingine anajiita B, alafu tuko na total. So in shillings. So our partners twalipa salary. Salary to partners. So A tumemlipa salary yake, B tumemlipa salary yake, we have the total salary that was paid. And we have interest on capital. Interest on capital. Tulilipa A interest on capital, tukalipa B interest on capital. We have the total interest on capital paid. We have some commission. Maybe it's only A that was paid the commission, have the total commission paid. And we have the bonus. B received the bonus, have the total bonus that was paid. And we have interest on drawings. Interest on drawings. So interest on drawings, kumbuka, it's an expense to the partners. So I'm going to make some drawings. So the business that is charging them the interest. So hapa inapunguza income zao. So A alilipwa interest, B akalipwa interest. You have the total interest on drawings that was paid. Then at that point we have share of profits or loss, losses in brackets. Unaacha line moja, you leave one line. Hapa chini you have the business income. So let me take an example of this. Let's assume this is the income from the business. Don't write what I'm writing first of all, and I'm using it to explain. So from the business, we made a profit of 16,374. The adjusted. So hapa tutakuwa na our 16,374. This is where it comes. Don't write the 16,374. Tuanza kushangaza ile wakula litoa. Out of this amount that we have, tutalipa salaries, tulipe interest on capital, tulipe bonus, tulipe the commission, right? And then we recover the interest on drawings. Now the balancing figure, what remains? The balancing figure is what we share with them as the profit or loss. Now, so tutachukua ile profit weka hapa. Then out of that we recover everything. What remains vinakuja hapa as the balancing figure, either as a positive to be the profit or as a negative to be the loss. Then you distribute to the partners as per their profit and loss sharing ratio, either as a profit or as a loss, either as a profit or as a loss. Allow me to put here my ends. So now you add everything for A, you add everything for B. Then after that, you bring here some other income. You see where they come? They don't come here below the business income. They are brought in the allocation schedule. Sawa. Other incomes zitakuwa hapa ni kama ni gani? Dividends from non-SACCO non-sacco corp itakuja hapa na inafaa ikuwe gross. Inafaa ikuwe gross. So you have the dividends from non-sacco cooperative society. Then we have, so for A and for B, tukiwa na interest tulisema the only non-qualifying interest is when it's the company that is receiving. This is not a company, it's a partnership, right? So anyway, you see an interest within itakuwa dash. Maybe tuko na royalties, tutakuja hapo. Tuko na farming income, itakuja hapo. Tuko na rental income, ita depend na your rental income kama ni commercial kama residential, and how much is the gross rent. Then at the end of the day, we have our total taxable income. Let's check the past papers. Partnership imetestiwa sana. Can check the past paper, see if we can do a question. We have some 20 minutes. So tuko na last teaching James and Patrick. Question 5D, page 5. December 2023, question 5D. So, James and Patrick. You're there? Great. We are told that James and Patrick are partners trading as highway enterprises are sharing profits and losses equally. So they share profits and losses equally. The following information was extracted from their books of accounts for the year ended 31st December 2022. We have sales, rental income, tutoe kwa biashara, iende kwa other income, ndio. Dividends, iende kwa other income, right? Sundry receipts, just ni income yao. So sundry receipts, that is an income and kama miscellaneous income. Gain on foreign exchange realized the taxable. It was realized, by which it is taxable. Interest on deposits in foreign bank. Hiyo ni exempt. Lakini kwanza itoke kwa biashara. Ndio. For other incomes, the take exempt. First of all, remove from the business. Profit on disposal of machinery, is it taxable? Are we in the business of buying and selling machinery? No, I don't work for biashara. We less the expenses, cost of goods sold, is it allowable? It's a genuine expense. Ndio. Registration of patents, allowable, disallowable? Yeye tumefanya kwa ile swali lingine. Tutasema ni disallowable. Because patents are fixed assets. Hosting of business websites, then allowable. Ndio. We are hosting. Hosting is allowable. Purchase of a computer is allowable. Staff salaries and wages is staff. But when you allowable, see partners. Partner salary is allowable. Still, it's allowable. Audit fees, allowable. Insurance, allowable. Purchase of office machinery, disallowable. Commission to partners, is it disallowable? It's a payment to a partner, still disallowable. Stamp duty, stamp duty. Ile kitu unashuku unasemanga tu disallowable. Ile una suspect ni disallowable. Kwa hivyo stamp duty to disallow. It all depends with the stamp duty on what. Mostly napanga stamp duty tunalipa kwa transfer property. Ndio. So it relates to capital items when it is allowable. Then impairment of goodwill, is it allowable? Disallowed. Ndio. Bank charges, are they allowable?
Yes.
Bank charges ni allowable. Fixing of new sign, disallowable. VAT paid, tax. Ndio. So disallowed. Repair of machinery, hiyo ni allowable. Ndio. Hiyo ni repairs and maintenance. Purchase of telephone equipment, fixed asset, right? Disallowable. Legal fees, subject to confirmation. Sababu kuna zile ziko allowable na zingine ziko disallowable. Ndio. Kama wako silent, you make an assumption. Can assume it is allowable. Gift to employee for meeting targets, you encourage that. Staff motivation, ndio. Very much allowable. Kwa sababu kwa tunakuwa na staff Christmas party, itakuwa allowable. Donation to Red Cross. Red Cross is now a charitable institution. It's an institution, ndio, for charity, right? So inakuwa allowable. Loan to employees written off, it's allowable. Hata wewe mwenyewe unaishi kwa hivyo ni disallowable. Cost of relocating to new premises, is it capital or revenue? You are moving the business from one place to another. What do you think? That moving the business, is it going to affect you for only 1 year or forever? It's going to affect you forever. Wewe ni disallowable. Sawa. Account for it pale kwa capital, I don't know how. Redundancy payment to employees, lazima to allow, ndio. Investment seminar for retired employees. At least neta wale wenye wameretire kwa seminar kuonyesha how to invest. Okay. It's okay. Hii ni tuangalie CSR. Ndio. CSR activities are allowable. Depreciation. We allow the depreciation. We disallow. Ndio. We know capital allowance, we don't know depreciation in taxation. Additional information. We are told that insurance comprises insurance cover for imported machinery against loss on transit. When we are importing a machinery and we pay insurance, that one should form part of the cost of the machinery. It is allowed. Tunaongeza kwa cost of the machinery. Insurance cover for business premises. Just in here 200 ni allowable. Ile ya machinery tutaiongeza kwa cost ya hiyo machinery. Iende kwa capital allowance. Legal fees include 25,000 incurred on drafting a loan arrangement between the partnership and the bank. Here, the negotiating for a loan. Don't disallowable. Cost of goods sold include carriage cost of a machinery, the business premises amounting to 34,000. To transport machinery. It is disallowable. In effect, we're part of the cost of the machinery in the capital allowance. That's all. Then we have Clothing inventory was overvalued by 25,000 and opening inventory overvalued by 8,000. So clothing stock is overvalued. Profit is also overvalued. Do we less or we add back? We less. The closing stock is overstated. So at a profit pay overstated. So to correct, we less. Opening stock was undervalued by 48,000. When opening stock is understated, profit is overstated. How do we correct? We again less. Clear? We less. Dividend income was from investment in shares in a local farmers cooperative society. I think dividends are coming from cooperative society. When non-qualifying, tied up for other incomes. Compute adjusted taxable profits or loss for the partnership. Therefore, nataka the allocation schedule. And when it's raining outside, you can go until 9. Until the rain stops. Yeah? At a 10. Haya, sawa. Wanajiita nani? Highway Enterprises. So Highway Enterprises. Adjusted taxable income computation. So 2022 adjusted taxable income computation. Let's put them in thousands of shillings. We have the reported net profit. They reported a net profit of how much? 11. 745.8. 11,745.8. Can we add back the disallowable? So add back the disallowable expenses. Can we add back insurance for imported machinery? Insurance of machinery of how much? 150. Can we add back legal fees for loan and loan? For legal fees, for drafting, just say for loan. An amount of how much? 25. Then cost of goods sold include carriage cost of machinery. Can we add back carriage cost of machinery? The fixed assets. Ingekuwa carriage cost of stock, ingekuwa allowable. But you only fixed asset, we add back how much? 34. Then closing inventory was overvalued. When closing stock is overvalued, profit is overvalued, we shall less. And the opening stock was undervalued, meaning the profit was overvalued, we shall also less. Paper note number 4, Thales. Dividends was from investment in local farmers cooperative society. Dividends iko pale kwa income Thales. Turudi kwa expenses zetu. Cost of goods sold, we've taken care of it. Can we add back registration of patents? So add back registration of patents. How much? 145. Hosting business website is okay. Can we add back purchase of computer? The computer, buy computer, 220. Staff salaries is okay. Can we add back salary back partner salaries? Partner salaries. Partner salary for Nigerians. James alikuwa ngapi? 1150 na Patrick akalikuwa ngapi? 1140. Audit fees is okay. Insurance taken care of it. Can we add back office machinery? We buy office machinery at the cost of 480. Commission to partner. James alikuwa commission ya ngapi? 120. Patrick akalikuwa commission ya ngapi? 180. Stamp duty, can we add back? So stamp duty of how much? 126. Impairment of goodwill, can we add it back? So goodwill impairment, I think 140. 114. Bank charges is okay, isn't it? Fixing of new sign, can we add back? The new sign we add back that 80. VAT, can we add back? VAT paid 180. Repair of machinery is okay. Can we add back telephone equipment? Telephone equipment, 53. Legal fees, taken care of it. Gifts to employees, that is okay. Donations, Red Cross, that is charity. Loan to employees, can we add it back? For loan to employees, written off. 138.4. 138.4. Cost of relocating to new premises, can we add it back? Cost of relocating, amount yang ngapi? 275.4. 275.6. Redundancy payment is okay. Investment seminar for retired employees is okay. Can we add back depreciation? So we add back depreciation. Ya pesa ngapi? 185. I think that is it. What to add back? Let's see what to less. So we less. Can we start with note number 4? Clothing stock overcast. Clothing stock overcast of how much? 25. Then you can also less opening stock. Which undercast? Opening stock of understated profit was overstated, so we less. 34. 34. So the value for other income. Rental income, can we remove it? How biashara? Rental income ya ngapi? 700 and yeah. I'm 48, sorry, thank you. 48. So we less other incomes. Rental is 750. Can we also less dividend? For dividend income, we less ngapi? I think 560. Salary 16 gain on foreign exchange was realized. Interest on deposits with foreign banks. Can we remove that one? Interest on deposits. Amount ya ngapi? 48. Then you also have the profits on disposal of machinery. It's ya ngapi? 35. 35. Then we also less something called capital allowances. Investment deduction. Unfortunately, this time round, how to spell the figure, so we have to calculate it. All assets that are there, all assets. Tulikuwa na office machinery, tulikuwa na computer, tulikuwa na neon sign, tulikuwa na telephone equipment, all those items. Let's give them the capital allowances. First of all, let's identify them. We have computer. The cost of computer of 220. Andika tu 220 times. Tenda kwa linkage tuangalie the rates. Taonyesha vile tunaipata. What else do we have there? Purchase of computer. I'm going back there to check. Purchase of office machinery. Do we have the machinery? Machinery nayo ilikuwa na maneno. Tulikuwa na ile insurance on transit na tulikuwa na transport. So the cost of machinery, we have 480. Ongeza ile insurance on transit note number 1 ya 150. Na pia tulikuwa na something. Think for cost of sales, carriage inwards. 34, ndio. 34. Then weka times hapo mbele. Rate yake tutaweka huko, tutaangalia kwa linkage. Which other assets we have? We had neon sign. The cost of the neon sign was how much? 180. So 180 times. We had telephone. Telephone, the cost is ngapi? 138.4. We shall look for the rate. Tumemaliza. Hizo tu, ndio. Yeah, I can see ni hizo. So rudi kwa leakage page 1. Page 1.
Neon sign ni 180 ama ni 80?
Sorry.
Neon sign ni 80 ama 180?
Neon sign is how much? Neon sign is at 80.
180 was VAT.
Haya, sawa. Thank you. Telephone is 53. Thank you. And let's go to the leakage we finished. Let's go to the leakage we finished. I think that part of investment allowance for leakage, page 1, in the table. Investment allowance, right? Capital expenditure number 1, number A is about the building. Hapa kwa category yetu hakuna building. So you're going to category number B, the machinery. Machinery used for manufacturing, there is none here. Hospital equipment, ships and aircraft, motor vehicles and motor vehicles. We have motor vehicles here. There is no motor vehicle. Computer software, calculators. We have computers. Computers wamesema rate yake ni ngapi hapo mbele? So 25%. Software na hardware ina categorizewa the same. So 25%. We have furniture somewhere. Telecommunication, building, machinery used to undertake operation. So kama hakuna, unai-categorize under other machinery. Say other machinery, the rate is what? So 10%. Is what is zinakuwa under other machinery. So 25% of 220, expect 55. 55, right? Hii ni ngapi yote in total times 10%? So get what to left, but the get what to add back.
Disallowable expense ni 87.96.
The amount to add back?
87.96.
90?
87.96.
Median
87.96.
87?
96.
900?
96. 96.
0.
6. But anyone else can review
And the
it.
amount to less? $15? 1,500? 87.96 plus 1175.8 minus 1,600.7. $18. 941.1. So that gives us our adjusted business income. So for 5 minutes, let's do the allocation schedule, number 2 of the question. Allocation schedule. We have 2 partners. Moja anajiita Patrick. James na Patrick. So we have James and we have Patrick and we have the total. The figures are in thousands of shillings. Can we give them the salary? James alilipa salary ya ngapi?
21.
Ndio. Patrick akalipwa ngapi? 1140. Total salary paid 2290. 2290. We have commission. Mona commission, James alipa commission at 2120. Patrick akalipa 2180. Total commission paid 4300. Yeah. Hakuna interest on capital, hakuna bonus, hakuna interest on drawings. So we have share of profit or loss. Share of profit from the business. How much did we make? From the business we made 18, 9.1.1. 89.1.1. What is the balancing figure? One point one. They were sharing equally, so divide by 2. 170.5. Tano. So 6175.55. Then you add everything for James, hii utaimalizia. You add for Patrick na yeka hapo, alafu naleta other income. Other income. Do you have rental income?
Hiyo total ya share of profit tumetoa wapi?
Sorry?
Hiyo nini 12351. Tumetoa wapi?
The balancing figure. What should you add to this to get this?
Okay. All right.
So this plus this plus X equals to this. Work out.
Okay. Thank you.
Work backward. This, alafu minus this minus this. Rental ilikuwa commercial, sio? Ilikuwa commercial. Na ilikuwa commercial, hiyo nipeleka kwa other income. So rental income, share it accordingly. $750,750 divided by 2. 3. Okay. 5,375. You also have dividends. Dividends because of our call. And then next. They are cross. Kwa hivyo tukosea, ingekuwa net ingerudisha kwa 100%. Ingemaanisha hiyo figure ni 85%. So what is 100%? So tupata kama hizo. So 560 divided by 2, 280. So you have 280 and 280. That is it. That gives us the total taxable income. Tuna add ya James yote pamoja na ya Patrick yote pamoja. don't know if I should give you one, but you'll not reach home.
Sasa tuna add hiyo business income plus hizo other incomes.
Yes, all these.
Nice. Okay.
We have Mambo Moto Mutoka. Question 4C. Just write it down. Napea tu mbili peke yake. Then kuapea mingi na discourage. August 2023, question 4C. That is page 10. Question 4C of August 2023, page 10. And the second one is so in April 2023, we have partnership. There is a question 5C of August 2022, page 21. August 2022, question 5C, page 21. So try those two. We compare notes next week. Let's come up with a swali.